Are wondering today why AMC stock is up almost 10%, and I think long story short, this is the pregame or the ramp up into the Moass, because when you're thinking about the Moass, it's going to be a gradual rise up. And then when you see shorts covering, the gamma squeeze kicking, that's when you're going to see those monstrous gains. And that's why, in my personal opinion, you want to be invested in AMC before those big days come. So you want to be involved in these days that are only 10% days, right? Because eventually we're going to start to get hundreds of percent gainers in a day. And with this executive order coming next week, this is what I've been talking about for a while now, is you're going to start to see these, 5 to 10% days kind of back and forth like we have been seeing over the last couple of days. So this is kind of what I would expect. We do have positive economic data. We did get core PCE that came out. A lot of people are excited for stocks, so that is certainly helping, as well as the option activity. But I will tell you right now, this is not a gamma squeeze. This is not shorts covering. You are seeing cost to borrow rates going up exponentially today. The average rate to borrow shares is going through the roof, as well as that you are seeing a lot more hedge funds actually borrowing shares today. The ratio of return shares and borrowed shares is kind of through the roof. So let's talk about exactly what's going on, give you guys the overall scoop. If you guys find value out of this video, hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. And if you guys want to get those free stocks, links down below in the description for Webull, Moomoo, and Public. You guys might as well take advantage of free money. Not too many things in life are free. You could argue nothing is free in life besides getting your free stocks with Webull, Moomoo, and Public. And if you guys want to come trade with me live in real time, link down below in the pinned comment for that. I am also going to be going over the new position that I initiated on AMC today. So nonetheless, let's talk about it, guys. We just peaked out at $13.50 per share. I imagine that's not going to be the top for the day. You have a beautiful overall bullish trend line, and if this trend line holds up, you might close in the 370s to even the $14 range if we do get a little bit more explosive throughout the rest of the day today. Now, before we get into AMC specific information, I do want to talk about what is happening on a more macro scale. What was the data that came out today? And you guys can see right here on this latest news, whatever you want to call it, newswire, 50 minutes ago, Goldman says signs that inflation is peaking could be positive for stocks, and that goes without saying. But that comment comes from this. It says the Fed's favorite inflation measure rose 4.9% in April, and a sign that price increases could be slowing. Key points. The core personal consumption expenditures price index, the Fed's preferred inflation gauge, rose 4.9% from a year ago in April, in line with estimates and a deceleration from March. Personal income rose slightly less than expected, but spending beat estimates as consumers tapped savings. Headline PCE rose just 0.2%, a sharp reduction from March's 0.9% increase. So the PCE actually takes into consideration a lot of different factors here. It takes into consideration spending, GDP, and a lot of other things as well. It's not as straightforward as like the CPI, right? But the Fed likes to look at this because it can be somewhat of a better gauge of what's going to happen in the future with inflation, with the inflation that you guys feel, in the grocery store or Walmart or whatever. You guys get the idea there. So the fact that it is coming down is definitely a good thing. And that's really why the markets have this overall bullish reaction today, and that's literally all as far as things that is really moving the markets, right? There's nothing really that is bigger than that. We did have earnings over the last couple of days. You had Alta, you got Big Lots, you had Autodesk, you got Workday, you had a lot of other stocks as well yesterday, like Costco. Pretty much all of those did well. Obviously, your Targets and Walmarts did not do so well, but people are kind of forgetting about that, right? So you're having good retail earnings and good economic data. So that's a recipe for stocks to go up when you haven't had any good news in a very long time. This week, if we were negative on the week, would have been the 8th straight week that we were down, that we had a negative return on the S&P as well as the NASDAQ. So that was a 20-year record right there. So it's no surprise that stocks are rallying right now. I will say we are still in a bear market though, so I would be pretty careful to try to call a bottom, that we've hit a bottom. I think it's possible that we do go lower, especially if earnings do come in really bad the second half of this year. But nonetheless, what's going on with AMC stock? We've talked about this many times. The executive order does go into effect around June 3rd. And like I talked about a week or two ago, I think this is because of the executive order, right? Look at this. Over the last 3 days, you have closed higher than you have opened, and you have a beautiful trend line. Now we're starting to get some real momentum here today, so that is a good sign. But I think you're going to continue to see this upward trend until we do get closer to the executive order that does go into effect on June 3rd. If not, possibly the next couple of days after that, that's when I do expect to see an even larger rally. And for just an example here, if we could make our way up to $20 per share and then see a 100% day, boom, you're at $40. Or see a 200 or 300% day, you're going to go exponentially higher than that. And in this market environment, especially if you're not allowed to use Chinese securities as collateral, which is exactly what the executive order is, and given the interest rates where they are, given how much stocks have fallen as well as bonds, you're going to see a lot of pressure on these hedge funds to cover on their short positions. And I don't think they will be able to kick the can down the road, given those other factors, even that are much different than what we've seen in January and in June. So this is the ramp up effect that we have been expecting, that we are now seeing actually coming to fruition over the last 3 days or so. Now, it also does not help the hedge funds that the cost to borrow rates are going higher yet again today. The cost to borrow max is at 14.91%, but look at the cost to borrow average. That is the one that has went up over 100% today. The cost to borrow average is at 13.08%. So that means on average, people are paying a lot more to actually take out shares to loan, right? And to especially sell short. Cost to borrow minimum at about 4%. There's no way right now you're getting, shares for 4%, but still, even if that's the case, 4%, decently high. Now you are seeing the short interest ballooning again today, which is very interesting that hedge funds are shorting the stock into such a big event like the executive order that arguably was the underlying reason why AMC and GameStop and other momentum stocks surged in January as well as in June. Now the short interest of free float is 23.25%. We're hitting a new record here. And right up until a major catalyst, I don't know why that is happening. Maybe they are just delirious. Maybe it's just algorithms that are saying, hey, stocks overbought, short it. Could be the case. If that's the case, that's the better case scenario. If not, you got to wonder if there's some degree of manipulation they are planning to do, because just on a risk management profile basis, it doesn't make sense to short a stock into such a big catalyst. But hey, we'll see. I don't know exactly what's going to happen, but the utilization is 100%. Days to cover is sitting at 3.5. So just basically telling you, if you do see volume come into the stock, then you could expect to see a pretty substantial move to the upside. Days to cover has really not been this high heading into one of these catalysts or a major rally in AMC stock before. You could see if we pull up the all-time chart, the only time days to cover was this high was obviously pre-January, and we have not been this high since January 2021, the first time the AMC stock did rally. It's just basically showing you volume has been low for an extended period of time. Now, these shares out on loan, you're seeing an 8.6% change over the past 7 days, 173.61 million shares that are out on loan. About 33.68% of the free float. So about 10% more than the shares that are actually sold short. So about 10% of the float is outstanding right now that is held in people's accounts, that is borrowed, that they are paying a cost to borrow rate on, but has not actually been sold short yet. So that could either be ammo to be used against us, or it could be returned, and that could be a very bullish thing. We're yet to know, because obviously they have not been returned. It doesn't look like they have been shorted too much, but look at the borrowed shares for the day. Almost 7 million, about 6.87 million shares that have been borrowed on the day. Return shares of about 148.13 thousand. So not very many people are actually returning their shares, which again is very interesting heading into a major catalyst like the executive order. Now, as far as the option activity, lots of calls that are coming through for June, July, September. And that's pretty much it. You got some December calls as well. But look at these. $35 call for December. $50. Oh, that's a $50 put. Oh, they're crazy with it. $19 call for September 16th. June 3rd, $12.50 call. $13 calls for June 24th. July 15th, $13 calls. A lot of these are for quite substantial amount of money as well, you know, $50,000, $100,000, $200,000 orders coming through. So that's looking pretty damn good. 20 orders totaling $6.8 million, positive order value of 44%. Over the past week, 96 orders totaling $55.09 million, positive order value of 67%. So I'm not going to argue with what we're seeing right here. It looks like a lot of bullish option activity and a lot of calls that are going through, but you do see some large puts like the September 16th $50 puts, July 15th $50 puts as well. And I think this is probably a hedging strategy, not necessarily just trying to gamble that AMC stock is going to fall. I think it's hedging out a large position, right, that they probably own in stock or in call options, right? Some form of a hedge one way or another. So I don't see any real bearish activity on the option chain, especially for the day, even considering now the stock is up about 11%. It's looking pretty damn good. Now let's look at the STONCO tracker data, and we could see for this week, you do see about 59,000 calls that are now in the money. Out the money calls at about 108,000. That doesn't matter as much because that's just by the end of the day today. The next big expiration is going to be June 17th, where you do have about 222,000 calls that are out of the money, 9,400 calls that are currently in the money. So there's a lot of potential buying power that is held in these call options that are out of the money, as well as the puts that are in the money. About 91,000 puts that are currently in the money for the expiration of June 17th. If those run out of the money, those are shares essentially for every one contract. It's 100 shares the market makers could potentially have to buy back to get out of a short position to essentially hedge these puts. So if you guys are unfamiliar, that's potentially as much as 9.1 million shares that would have to be bought back by the market makers. And obviously if 200,000 calls go into the money, or even half of that amount, 100,000 of these calls going into the money would be about 10 million additional shares that hedge funds would have to buy, or the market makers would have to buy to basically hedge for the calls, right? And that's how gamma squeezes as well as reverse gamma squeezes work. But gamma squeezes also work because of the puts that are in the money. And we have a lot of those puts that are in the money currently for June 17th as well as July 15th. That's going to be a big day as well. About 300,000 calls that are currently out of the money, 15,000 calls that are in the money, 47,000 puts that are in the money, as well as 53,000 puts that are out of the money. So it looks like over the next 2 months or so, you could see a lot of very violent moves just back and forth in the share price of AMC stock, and I wouldn't expect anything less. I think it's definitely pretty telling, even with the executive order alone. If you followed this, then you know January and June, it lines up to the dates of the executive orders getting implemented, stock going crazy, and then when it's essentially retracted, the stock tends to fall right after. Now, it says AMC stock news. AMC Entertainment rallies 8% on Friday amid bear market bounce. It says GameStop continues to see short squeeze-like action ahead of its earnings call. AMC arguably has a better underlying business than GameStop over the long term. And that's what I want to point out as well, that AMC is no longer trading with all of this momentum fluff to it. You're not buying this stock necessarily with a lot of the FOMO baked into it, right? The stock has fallen dramatically. If AMC gets back to, 2019 revenue numbers of about 5.5 billion, the stock's trading at about $5.5 billion market cap. So it's only trading at about a 1 price to sales ratio, and that is very inexpensive in and of itself. And you mix that in with the growth rates that AMC might start to see, and you're looking at even a attractive fundamental case here. So especially if you're buying at these prices, I think it's going to be very hard to lose money over the next call it 3 to 6 months, even as soon as the next couple of days or next couple of weeks, if this really is the pregame to the Moass like I do think it is. Now, if we look at AMC on a more technical basis, you can see stock's absolutely ripping right now, up about 11.5%. But if we pull this out to the daily candlestick chart, we're still not even to that $15 level that we were at in early May. So we've fallen a lot, and we're only starting to regain some of the ground that we have already lost. But the next important resistance levels will be about $15 per share. And then after that, the 50 and the 100-day moving averages at about $17 a piece for those. They are starting to converge. So it looks like that's probably the range that I would target. Potentially as high as 20 or even 25 if we do see big moves before the executive order does get implemented. If for whatever reason the markets do go through a panic and the stock falls, the markets fall, whatever happens, I mean, this market is very bipolar, just back and forth. Watch that $10 level, but really watch to see if we can remain above 13. That was the first resistance level. We did find resistance at yesterday and did break above today, so that was good. The RSI is at about 50, so that is pretty much neutral, so nothing too crazy there. The MACD is now bullish. The stock is almost up 12% on the day, so let's see where this thing goes. As far as what I did as a new position for the day, I did buy a July 15th $40 call for about $66 earlier, and I do have a couple of the July 10th as well as June 10th and June 17th calls as well, targeting really that $20 range. And I do have a $13 July 10th call that is now in the money, that is doing very well. So if you guys want access to all of my trades, link down below in the pinned comment to do so for that. Get yourself those free stocks, all of that. That's going to be it for this video. That's what you guys need to know. I will see you guys in the next one.